The Zimbabwe Stock Exchange, ZSE, has launched trading in Zimbabwe Gold, ZiG, the new gold-backed currency replacing the Zimbabwean dollar. Denominations range from 1 to 200, with an exchange rate of ZiG1 to 2,498.7242 Zimbabwean dollar on the ZSE. ZiG aims to combat inflation and stabilize the economy. The currency is backed by a composite basket of foreign currency and gold reserves held by the Reserve Bank of Zimbabwe. The government requires companies to pay at least half of their tax obligations in ZiG, with reserves of $100 million in cash and 2,522 kilograms of gold. The central bank provides strong backing for the currency. And joining me for more on this is Dr. Prosper Chitambara, a developmental economist. Thank you, Dr. Prosper, for joining me today.
Thank you so much for having me.
All right, first, I'd like to get your reaction to ZSE, launching trading in Zimbabwe Gold. I mean, what do you make of that? I'm sure you anticipated that.
Yeah, definitely we anticipated that. I think it's also in line with the new monetary policy agenda and trust that has been announced by the central bank. So that's part of the alignment process. Because once the monetary policy has been announced and unveiled, we expect that all the other policies at sectoral level must now be aligned to and complement the monetary policy statement.
All right, well, Justin Boni, that's the ZSE CEO, actually announced that the indices will be rebased to 100 basis points in a bid to sort of allow the indices to accurately reflect the performance of the market in the context of the new currency. Now, I'd like you to talk to us about how investors are reacting to this and, what your own thoughts are.
Well, investors are generally cautiously optimistic of the whole monetary policy statement in general. Yes, there is some renewed hope and optimism that maybe things could work out for the better. Maybe we have learned from our past mistakes and we could be at the verge of doing things maybe differently to ensure there is sustainability in terms of the macroeconomy. Because as long as the macroeconomic environment is not stable, it affects investments either on the stock exchange and even investments in the other sectors of the economy. The economy can't grow sustainably in an environment that is largely unstable with a lot of uncertainties.
Well, talking about Zimbabwe's currency, really, historically, Zimbabwe has struggled with hyperinflation. We remember in 2008, it issued a $100 trillion note, and it has since switched from foreign currencies, bond notes, gold coins, and even a gold-backed digital currency. Now, in 2019, it revived the Zimbabwean dollar with stringent rules, before permitting the use of foreign currencies in March 2020. Why did these measures fail? Are there any lessons that you think have been taken so far that would probably ensure that we do not make the same mistakes or ZiG doesn't go the same way?
Yeah, definitely there are some lessons that have been learned, and one of those lessons is the need to discontinue any passive fiscal activities, and also the importance of limiting government's overdraft facility at the central bank. And I'm happy that at least in terms of passive fiscal activities, that has actually stopped, and also even in terms of government borrowing money from the central bank, that has also stopped. So I would say traditionally our major challenges have emanated from unsustainable growth in money supply, which has spawned chronic high inflation. And because of the chronic high inflation, economic agents have lost confidence in the local currency, and we have seen the dollarization of the economy. And once economic agents have lost confidence and trust in a currency, it takes a very, very long time to restore that confidence. So I think the challenge of confidence, that's the biggest challenge that we actually face as an economy, such that even with the new currency, without walking the talk in terms of implementing the monetary policy, I think it's going to take a bit of time. It's going to be very difficult to ensure that restoration of confidence, such that people are confident to hold the local currency as a store of value or even as a medium of exchange. So what has been happening with the Zimbabwe dollar, for example, is that you get paid in Zimbabwe dollar, and immediately after getting paid, you have to substitute that Zimbabwe dollar into the USD as a way of preserving your value. So that process has actually resulted in an increase in the demand for the US dollar, which has also caused the local currency to depreciate. So I think that's the challenge we need to deal with. But I'm hoping that if we are able to sustain low and stable inflation for at least 6 months, and by low and stable inflation, I'm referring to inflation of below 10%. If we can have a single-digit inflation rate for at least 6 months, I think that will go a long way in terms of restoring confidence in the local currency, even in the new currency by economic agents. So I think ultimately it's about the attainment of these key benchmarks, such as for a reduction of inflation and also even boosting our reserves. I think that will also be critical.
Dr. Chitambara, just before we go, I'd like you to just tell us, I mean, do you have concerns about the basket of currencies, that this particular ZiG is backed by? I mean, are there risks as a result of that? Let's close on that.
No, I think I don't have any problem. In fact, it's actually backed by largely by gold and by the USD. Of course, we need to build up on our reserves. We currently have about $285 million worth of reserves. So my view is that that may not be adequate. I think we need to boost that as a way of ensuring that there's greater confidence in the Zimbabwe Gold.
Okay, thank you so much, Dr. Prosper Chitambara, Development Economist, for your time on Business Edge today.
Thanks so much.
Well, that's our offering on the show today. You can follow us on social media. We are at News Central TV. You can also go to our website, www.newscentral.africa. Thank you for watching. I am Perpetua Fasome Peter. Bye for now.